Welcome back to another episode of the Friday Five. I always think I should have something fun or witty to say at the beginning of these, but I just don't. So here we go. Let's talk about mortgage rates. Again, these are national averages from Mortgage News Daily. VA 30-year fixed 5.95%, FHA 30-year fixed 5.94%, conventional 30-year fixed 6.34%, conventional 15-year fixed 5.82%, conventional 7-year ARM 5.92%. So a little bit of improvement over last week. The government shutdown is over. We're starting to see some economic reports come back out again, although many of them are just stale information or stale data. We had a jobs report that came out yesterday that, or was it this morning? The days run together. It was yesterday. Anyway, it came in actually better than expected, but the market seemed to just brush it off. Also, unemployment was higher, so I don't know, it kind of counteracted it a little bit. So I don't know, jobs market feels sluggish in general. I think you see a lot of big employers laying off lots of people. There's definitely some signs of a softening consumer, softening economy. So I'm somewhat bullish on rates and that we may see some future improvement, maybe more rates in the fives. I just don't know how fast that's going to happen. No one does. So anyway, good news on rates. We're a little bit better than last week, and hopefully that trend will continue. Number two, another topic that has come up in the media, basically because this administration likes to float ideas out there via social media and see if they stick. I don't think this one is going to stick. Portable mortgages. So I do love that people are making an attempt to think outside of the box, but I don't know that this is a viable option. So what is a portable mortgage? So a portable mortgage is essentially where you have your 3.5% rate on your current house, and you owe $200,000, and somehow you can take that mortgage that's secured to that property, but you could take that mortgage and move it to your next house. So there are definitely some significant obstacles that I think will prevent this from ever happening. First, one of the primary pieces of a mortgage that makes it a safe investment is that there is collateral on the loan. The collateral is the house that it is secured to. In this case, we are completely changing that primary piece and moving it from house A to house B, which I think will make it very challenging. Typically, new house equals new risk, new underwriting. Second, it breaks the investor system that's behind the scenes. So most mortgages get sold to an investor behind the scenes. The investor buys the loan and sometimes packages of loans based on risk profile, and portability would blow that up. And then essentially these investors who have purchased these contracts, it's really what it is, they're buying an investment contract, the terms would change, and they're just not going to be okay with that. The system's not built to do that. Third, borrower qualifications change. So income, debt, credit, guidelines, everything would need to be reapproved anyway if you're trying to port that mortgage. Fourth, lenders can't carry these old rates on forever. 3% loan in a 7% rate world really doesn't work. Lenders would take huge losses, and there's really not the precedent for them to have to do that because portable mortgage, these mortgages were not written that way. And lastly, the loan amounts rarely match. So I guess you, in theory, could get some type of second lien, home equity or something to buy the new house. But I just don't think, bottom line, I think portable mortgage sounds amazing, but the U.S. mortgage system and the way things are structured right now isn't built for it, and you would have to go back and retroactively make old mortgages that already exist portable, and I think there's going to be a lot of opposition to doing that from the investors who already hold them. So I don't think it's going to happen, but maybe it's a cool idea, and who knows, I could be wrong. Number three, another thing out there in the media, conventional loan, there is no longer a minimum credit score of 620. Sounds cool, great soundbite, we're making it easier to get a mortgage. But here's the reality. I think big nothing burger probably isn't going to be helpful because all of these mortgages are run through an automated or computerized underwriting system. And I doubt that we're going to get an automated approval on many loans that have a credit score, conventional loans that have a credit score under 620. In fact, right now we have loans where customers are putting 5% down with 700, 705 credit scores, and sometimes we don't get an approval. I highly doubt any lender is going to choose to manually underwrite these loans that aren't getting an automated approval, so I don't think anyone's going to want to do that. Here's the one person that I think it could help. There is going to be some random client who has poor credit for whatever reason, but they have a lot of equity in their current home, or maybe they inherit a lot of money, and they're able to put 50% down on their new purchase. So maybe they have a 590 credit score, but they're buying a $400,000 house, and they're only borrowing $200,000. I think we may see some approvals on that type of loan as long as the debt-to-income ratios are in line as well. So I guess it's nice that the credit box is opening slightly, but I think it is going to help very few borrowers. Most of those under 620 credit score borrowers are going to go FHA anyway. Number 4, I want to give you a quick success story. So one of my customers, Michelle, wanted to sell her house in Allentown, wanted to buy a house in Emmaus, and she really couldn't do it without either making it contingent on the sale of her current house or using a bridge loan product. So we set her up with a bridge loan product. She was able to close on that bridge loan earlier this week, and that allowed her to extract a decent amount of equity out of her current house, which she then is going to use as the down payment and to cover the closing costs on her new house. And with that product, she also doesn't have to make a mortgage payment on the bridge loan. So it also allowed us to exclude that old mortgage debt and help her qualify. So great product. She had 5 dogs and has her mom living with her, and it just wasn't feasible for them to be able to sell and buy on the same day. And the bridge loan product, although there was a little bit in closing costs, it was a perfect solution to helping make the transition a little bit easier for her and her family. And lastly, number 5, quote of the week, Sahil Bloom, his Curiosity Chronicles. I love this. I'm actually going to pop it up on the screen here. The recipe is simple. Do what most people avoid. Wake up early. Focus deeply. Move your body. Eat real foods. Obsess over one thing. Go on adventures. Read old books. Be present. Be kind. Have difficult conversations. Love ferociously. Simple is beautiful. I love that sometimes we want to make everything super complicated, and sometimes you just need to do a lot of the simple things and do them consistently. Thanks for watching. I hope you have a great weekend. I hope you have an amazing Thanksgiving with your family. I will be doing Thanksgiving next Thursday, Friendsgiving next weekend. So unless I decide to shoot a out-of-office, adventure-style Friday 5 from out in the woods, I probably won't be on next week, but I'll see you the following week. Thanks for watching.